Thank you, guys. We're back. We're going to move swiftly on and introduce the next panel. I'm going to bring to the floor Justine, who is going to moderate this panel, which is looking at IPOing and SPACs. So thank you very much, Justine. Take it away.
Hey, good morning, everyone. I hope everybody's well and safe, and that you're joining us virtually. I'm having my Yorkshire cup of tea with our fantastic panelists here. So today we're going to get cracking. And what we're going to be talking about first with our excellent panelists is, first, what I want to do before we crack into the IPOs and SPACs is I want to ask the panelists, who are you and what makes you tick? Lior.
I'm first. So I'm Lior Navon. I'm the head of sales and markets development on the Tel Aviv Stock Exchange. What makes me tick? Actually, it's a very good question. I would say that trading, capital markets, that's definitely what drives me since I was very, very young.
Awesome. Over to you, Mark.
I'm a managing partner at FinTLV. We manage venture capital, growth equity, late-stage investments in technology related to fintech and particularly insurtech. And as it relates to capital markets, it's our goal to help our portfolio companies reach the capital markets and trade well post-deal.
Wonderful. Over to Neil.
Thanks, Justine. Very nice to meet you all. I'm Neil Shah, and I lead business development for the tech sector at London Stock Exchange. I guess what makes me tick is meeting interesting people and learning new things. So thanks very much for having me.
Excellent. And Daniel, where are you?
Hi everyone. Apologies about my camera, but I'm having technical difficulties. I'm at White & Case, a partner in the corporate practice, and co-lead our Israel practice and our fast growth technology team across EMEA. I love doing deals.
Yeah, you're the deal maker, the risk taker, right?
I don't know about that, but that's what I enjoy doing.
Fab. So I kind of would like to kind of reach out to talk about the new trends in IPOs and what we've seen both during COVID and the fact that, you know, all of us can distinctly say that IPOs are back in fashion and that, you know, we're in the midst of SPAC fever, but we'll get to the SPAC fever afterwards. Lior, tell me about what you've been seeing in the markets recently.
I guess, you know, since the COVID started, we saw, you know, the trend goes directly to technology, to the technology sector. Nasdaq was the first market to lead, I mean, the uptrend. And what happened in the Tel Aviv Stock Exchange during the last year was super exciting for us. For years, we've struggled to attract technology companies to list on our exchange. We've actually done a lot of changes during the last couple of years. We went through the demutualization process. We IPO'd the company. Tel Aviv Stock Exchange now is a public company. So we had a strategic plan to target those startup companies, and what happened in you know, the COVID actually accelerated everything we thought just happened during the last year. We had more than 70 IPOs. About 80% of the IPOs are technology companies. There is a lot of appetite, especially what changed the market was basically investors, local investors that invested usually in real estate and fixed income. We have a very sophisticated and developed fixed income market, which is not an OTC market. Everything goes through the stock market. And the way we see it today is that local institutional investors are investing more in technology. Retail investors joined the local stock exchange and trade more on a daily basis. So we saw volume growth, and we have a pipeline of about 120 companies just on the first quarter. So we will definitely looking forward to see what will happen. I'm excited to have the first unicorn very soon to IPO on the Tel Aviv Stock Exchange. We've developed new method that help companies to go public on the local stock market, but goes to a different way of offering. Book building using, you know, international underwriter, which basically makes it a global offering. which will definitely be a great method in the next couple of months. You'll see more IPOs like that. So hopefully the local stock exchange will have more companies from the technology sector. The clean tech sector grew very nicely during the last couple of years, grew from about $1 to $2 billion US dollar market cap to about $10 billion market cap in the last 2-3 years. I guess we see the same trend in other markets in the world. So, I mean, pretty exciting times. We work 24/7 and I mean, looking forward to this year.
So you're definitely confirming that IPOs are back in fashion?
Definitely, yeah.
Excellent. And over to you, Neil. What have you been seeing in London, you amazing cyber lord and fintech wonderful being?
Very much, Justine. Very similar to Lior, is a huge uptick in activity, both in terms of new issuance at IPO, but also existing issuers coming back to market. Now, if you asked us this question in the middle of summer last year, it really felt like COVID was going to shut the market, but it was amazing to see institutional investors and retail really supporting existing companies, the legacy companies such as Rolls-Royce and travel companies, really hit hard by COVID, but also many of the exciting tech and fintech companies that I look after. So we had something like 635 equity transactions last year, $65 billion raised, 43 IPOs, and about 40% of new issuance was in tech and consumer internet. That trend has continued in Q1, and today we've had our 12th tech and consumer internet IPO, a small company called PensionBee that's looking to democratize access to pensions and make it easier to move pensions online. So look, long may it continue. It's great that IPOs are cool again. Founders have so many more options to raise capital, and we stand ready to support them at London Stock Exchange.
Thanks so much. And Mark, would you like to add anything around what you've been seeing?
We're active in the growth equity stage, which means that we're financing companies that are looking to go public within sometimes what used to be 3 years has been consolidated to a shorter period of time, but people are already talking about whether it's IPOs or SPACs. The capital markets, the amount of cash that right now is in the capital markets and needs to put money to use, both in growth equity in the private stage, but certainly in the public equity space, is creating a tremendous amount of demand that pushes up the valuations of companies in our portfolio. And inherently, the companies that are able to raise the cash now at the prices that we see are creating a greater moat and allowing them to be some of the winners going forward. On the SPAC front, we've seen a tremendous amount of activity. We've participated in PIPEs. We've participated in IPOs. So I think the past 9 months has been really one of the most active times that I've seen in my over 20 years experience in the field.
Thank you for that. I'd also like to kind of get down to basics in terms of, if a company is thinking about IPOing, how should they be behaving? When should they be interacting with the exchanges? I know for us, like behind me, our word is our bond. So we interact with companies many times, like 3 or 4 years before they're even thinking about going public. And Lior, I'd like to hear from you around that to give some really useful takeaways for our audience.
Yeah, I guess as an exchange, I mean, we've realized that companies are staying private longer, so we need definitely to get to know the company as soon as possible. So we, in our perspective, I think that companies need to plan ahead, looking forward to an IPO. I guess the minimum time to plan an IPO is in Israel is about 6 months, but you need to think about it at least 1 year, 1.5 years in advance. in our perspective, I think connecting to different market participants as soon as possible, which means you need to interact with, consultants and lawyers and understand what should be the structure and be an IPO ready company. We see a lot of companies that now have, an IPO ready mode, which we definitely support. They don't know when they're going to go public, but definitely the timing of the market will tell. Now the timing is great, so everyone rushing, and when everyone rushing, you don't want to be there because there is a bottleneck both in the regulatory side, lawyers. It doesn't matter where. It takes more time to accomplish the mission. So if you are ready, if you have the management in place, and you have the right structure in terms, board of directors, which are I would say could be a good. I forgot the word, but anyway, they could be a very good persona as a director. I think you definitely need to prepare everyone in the very beginning, and I guess that's my takeaway.
Excellent. And Neil, I'd like to hear from you.
Sure. So I guess just in terms of trends, look, we have seen companies staying private for longer, but in recent times, we've also seen a number of companies decide to come to public markets much sooner than we've seen in the last few years. Why? Really, I think markets are here to support good companies, and I don't think there's any right answer now. Some companies raise Series A, Series B, others may wait to a G or H, and we've seen success on both sides. You take a company like ASOS in online retail, and that was a business built in the public domain. And you take a more mature business like the Huck Group, which saw multiple rounds of venture capital, and you could argue both have been tremendously successful. PensionBee that listed today had about £6 million of revenues, and our markets are here to support good companies regardless of the stage at which they're at. Advice to founders is don't forget to execute, because fundamentally that's going to be the biggest driver of your business. And IPO, like every other transaction, is a huge distraction. So you want your revenues, your growth, your profits to be all moving in the right direction. I think simplicity is key. Don't be afraid to ask for help. There's many good advisors for all aspects of your business, and so go and see that help. Keep things simple, and don't be afraid to go against the grain. I think there is some conformity bias to always look to the States, but as Lior's seeing, as we're seeing in London Stock Exchange, you don't need to be a unicorn, let alone a decacorn, to go public on our markets. And you can achieve good results in Europe, in Israel, as well as going to the States.
Great. And in terms of timelines for the process, Lior was saying, 6 months to get through kind of all the different stages. What's your take on London in terms of timelines if you want to go public?
Yeah, very similar. Really, you'll be working off 6 months now. You can accelerate that. Last year, we had some IPOs on our AIM market where companies were well prepared, and they were able to list in 10 weeks from the get-go. But the straw in the tent is the accounting work streams, and coming back to preparation, you really can't start some of that work soon enough.
That's really helpful. And Mark, what would your be advice? Because you've taken obviously many companies public.
Well, yeah, I think just speaking about what Neil just addressed, I think from a private company perspective, companies need to prepare themselves not only from a financial and accounting perspective and audit, but I think, as you mentioned, Justine, as well, as it relates to governance and board governance, having a diversified board is important, and having these directors on board for a while, because there's a culture of the company that needs to be preserved. I think ensuring that the company is clean is important. What I mean by that is everything related to debt, anything related to side agreements, anything that's hairy around a company that could raise eyebrows will slow down a process. But if you build the company in the right way from day one, you should be well positioned. I think the other thing to think about, and certainly everyone else is going to address this, is that going public is just another stage of development in a company's life. It's not that you run through a ribbon and that's the end game. It's really the beginning. It's really passing on the baton to the next stage. It's just another form of raising capital. So therefore, I think execution throughout the period from the decision to list and post-listing, I think the quarters following and the ability to forecast and building a reputation of being able to hit your numbers is extremely important once you're in the public domain on a quarterly basis, not only on an annual basis.
I just want to add to that, building trust with investors is super important. And companies do not realize that in the very beginning. A lot of shareholders trying to maximize the value of the company during an IPO. And it's usually not the right way to go. You need to build trust with investors. It's a very long, you need to look long-term. And the trust is the most important thing. If investors makes money with you and you execute, I guess you need to top the market again in a year or so. You'll have their support. If that's not the case, you'll be struggling. And that's the main, I would say, message to every company that I work with. Do not maximize your IPO and get expectation to the sky. Just be very, very conservative about expectations and forecasting, and that's, I guess, that's the right way to do an IPO.
And sensible about valuation as well when you talk to the investors.
Yeah, Justine, just if I may, I agree entirely with what everyone's saying. I think we've seen over the last 18 months or so companies being more willing to put in place kind of public company type procedures and policies at a much earlier stage, and that's definitely our advice, even as early as kind of Series A, because you just never know what's coming around the corner, particularly with the SPACs that we can talk about in a minute. But yeah, getting the right board in place, starting to bring independent directors in, getting all your compliance policies and procedures ready, the accounting, as we've discussed. It's all just about behaving in the right way and just making sure you're not setting yourself up for failure when an opportunity comes along. And as I was saying on the SPACs, by definition, the companies who are being approached by SPACs are kind of not ready to be public companies. Every CFO I speak to who's on the target side or the D-SPAC side, as we say, the first thing they say is, we're not ready to be a public company, and that's basically the definition of a SPAC. So the more organised you can be, and the more forward-thinking you can be in terms of putting everything in place from a much earlier stage, and the better you are, and the more optionality you're going to have going forward.
Thanks, Daniel. That's really helpful. So before we move on to the SPACs scenario, I'd like to kind of put the question out that even though our cousins from the US are not with us and they're sleeping at the moment, is there now a trend that, companies are looking less towards the US and more towards the European and Israeli markets? What do you feel? I mean, apart from SPACs, and we'll get to that shortly.
So I'll start. What we've seen that, companies, let's say companies that have about 40-50 million US dollar ARR, they had the only alternative they had before is, continue raising money, from private, the private equity sector. But what we've seen now, and we have a couple of companies like that now, they are not waiting for NASDAQ anymore. Okay, if they are valued at 300, 400, 500 million US dollar, they will go for a local IPO because they are seeing the demand, they see the appetite, they feel the market, and the vibe is different. So I guess in my perspective, companies are now definitely look on the local markets, but NASDAQ will continue to be very dominant on the higher valuations, that's for sure. It will be very hard to compete when you are targeting, you know, companies that are raising money in a $5 billion valuation in the local market, just not enough demand. In London, of course, it's a different story. In Israel, it's a very small market, and therefore we've developed the global offering, which will definitely help to bring more international investor to the local market. But I guess that's my note about that.
Yeah.
Thanks. And Neil, what are you seeing?
Sure. I mean, just to add to Lior's point, I think today founders have so many more options. And look, the US has always been the cool place to go for tech CEOs. I've not met many tech CEOs and founders who don't aspire to go and ring the bell in the States. But you know, it's really hard to be relevant when you've got companies like Coinbase or Roblox going public there. You know, what's the chance does a Israeli or a European unicorn really stand to stand out amongst the crowd, whereas in their home market in London, you get unparalleled relevance. And we're here to support local companies, but also international companies, and to partner with Lior and team. So you know, we saw a company of a fintech from Kazakhstan. They raised, I think, 130 on their home market and 870 here. Again, you know, founders have so many more options, and it's really important to do your homework and see what's the right answer for your company, not just to follow what people have done previously.
Excellent. And Daniel, would you like to introduce more about, you know, the SPAC environment and what you're seeing and the SPAC frenzy that's going on? I'd love to open the floor to you and Mark on this.
Yeah, sure. And actually, I think, you know, it's a good conduit, because Europe is going to become a lot more relevant to Israeli companies and technology companies more generally as a result of the SPAC attack. That's my view anyway. I mean, we're seeing, you know, obviously SPACs have been incredibly popular over in the US, and you know, the number of IPOs on the SPAC side and the de-SPACs, the business combinations, is insane from a US perspective, and we've seen lots of really high-profile Israeli companies being acquired by US SPACs. But over the last 3 or 4 months, that has now pushed over to Europe as well. So, you know, the number of IPOs on the SPAC side that are listing in Amsterdam is pretty phenomenal, and it's only growing on a daily basis. It's at Amsterdam, Frankfurt, Paris are kind of the primary markets at the moment, but London is, of course, opening up very quickly, particularly with the recent review that's happened in the London market, and the attempts for the hurdles that have been placed upon companies from a SPAC perspective, particularly around like suspension of shares, and those likely to fall away in Q3. We're seeing, you know, a very large pipeline of IPOs in the SPAC market coming to London, and the vast majority of the European SPACs are targeting technology companies, and that's going to mean that we have a massive swathe of European tech unicorns and slightly smaller tech companies as well listing on European markets for the first time, and that naturally is going to lead to a more appropriate regime and investor base and focus from a general IPO capital markets perspective as well, in my view.
Thank you. And Mark, over to you.
Yeah, I'd just like to share a few observations and comments. One is, I think what we're seeing in the capital markets, and whether we're talking about Tel Aviv or we're talking about London or Frankfurt or any of the markets, we're looking at a world where, with interest rates where they are, and with the corporate bond spread where it is, and the amount of institutions that need to deploy capital, that have a difficult time deploying the capital in private companies. We see a secular trend of demand for public equities. And within public equities, I think growth is a place where, to make up for the low interest rates and the low fixed income, a lot of cash is going. Now, certainly there's a trend towards value right now, what we're seeing. But the demand to be part of the technology story is something that's happening on an institutional level and on a pension fund level. That said, I think it's important just to talk about what's the difference between an IPO and a SPAC. because I imagine there's some people who are listening and are saying these are just letters and I don't even know what they mean.
Yeah, you took the words out of my mouth. Thank you. Definitely clarification is needed on that.
So the reality is that an IPO and a SPAC are, one means initial public offering, and the other means special purpose acquisition corp. But really, what they're effectively are is they're pathways private companies to become publicly traded. A third option is to do direct listing. Initial public offering is when you're selling shares in a public way, and the first time you've done it is by listing your shares on exchange and simultaneously selling shares to the public. A SPAC is you're listing in a public entity that's already traded, and the cash component is not necessarily a public offering. It's going to be that there's some cash that is existing in either a trust or in a PIPE, which is another private investment in a public entity that's creating some form of cash in exchange for equity. When people talk about IPOs in fashion or SPACs, is there space for SPACs? I think, as the headline is here, I think it's an interesting title, because really what it means is, are the capital markets flexible enough to recognize that there are alternative pathways for private companies to list? And that's all, because once the transaction has consummated, it doesn't matter how you got there. What matters is that you're now publicly traded. What I think matters to companies that are considering this is, what do they want to work with an investment banker who sets their value, which would be an IPO in the classic fashion. We've got some companies who only want to go through an IPO because of their own reasons. Whereas some companies say, no, I'd rather deal with someone who's committed to me long-term in a SPAC, meaning the sponsor of a SPAC, who's going to have equity with me, and I'll negotiate the deal with the corporation that I'm merging with. Now, there are investment bankers involved in the process on both of those, and there are institutions involved in the process. But the reality is that the company needs to have a story that will perform 6, 12, 18, 24 months forward. And that's the only thing that really matters. How you get there is a matter of deal structuring. And I think that what has happened is that because the warrants that were part of the options that were part of the SPACs that previously created an overhang on the structure are now lower, and because the quality of the sponsors and the quality of investors that have been in SPACs is higher, that it has become an alternative form of listing. On the other hand, I think there has been, because of the misalignment of interest of a sponsor of a SPAC versus an IPO, where they just want to get a deal done no matter what, there has been a natural inflation. Not inflation in terms of currency, inflation in terms of the value of companies that are going public because of the demand. I imagine that sometime over the next 3 to 6 months, you're going to see a rationalization of the process, and both of these alternatives will continue to exist, and people will become more familiar with them. And you'll see an expansion into Europe, because the basic concept and structure makes sense for certain groups. And I'm excited to see how that develops, and to partner with groups such as, whether it's the Tel Aviv Stock Exchange on an IPO level, or whether in London. Every company needs to think about what's best for them in terms of their institutional shareholder base and who they're looking to be with in the long term in terms of the exchange and where they're looking to grow.
Thank you. That's great insights. I appreciate it very much. I'd also like to touch on the new vehicles that Daniel was talking about. You know, if people are considering doing a SPAC, what new vehicles are going to be available, you know, both via TASE or via London. Daniel, touch on that for us, please, before we go over to Neil and Lior.
Yeah, so as I was mentioning, historically, i.e. in the last year, all of the activity has been in the US, and all of the SPACs that are being raised have been in the US, and so there's a massive amount of capital, because the companies the sponsors who are raising SPACs have have to do a deal generally within 24 months. So there's now lots and lots of opportunities for these US SPACs that have listed and have the cash sitting on their balance sheet, plus the PIPE investment, as Mark said, to come, who are waiting to do deals. So from an Israeli target perspective, lots of Israeli companies are being approached by SPACs on a regular basis, and we're also seeing people who are considering exits now looking at triple tracks, which is potentially an IPO, potentially a sale to a private equity house or a corporation, and then potentially a sale to SPACs. So up to now, the action's primarily been in the US. There are a number of SPACs from a technology perspective that have recently listed in Europe, and the pipeline is growing on a daily basis. So there's going to be lots of European SPACs who are also going to have Israel under their mandate, and there are some that are listing with a specific mandate to only acquire Israeli companies, and that's also coming into Europe as well, more generally. Lior, I'm not aware of or working on any Israeli SPACs in and of themselves. I don't know if you want to comment on that.
Yeah, actually, we are working on an Israeli SPAC together with the Israeli Security Authority. Hopefully, we'll announce in the following weeks what will be the exact structure. It will be a little bit different than the structure in the US. I mean, we'll keep the same method, but we'll keep it. It will be less, I would say, friendly to the founders in terms of money you need to invest in advance. So we'll demand definitely something between 5 to 10% that the founders will invest together with other investors. But on top of that, we are definitely working on this type of structure. We also launched 2 new vehicles during the last year, which I'll be happy to share. One of these is basically a tradable venture capital funds. We had 9 IPOs like that in Israel. Let's see how it will work long term, but in the short term, the idea was to help retail investors to get exposure to the venture capital market, which is not very accessible for most of the retail investors, and do it via evergreen fund, which is tradable, so the managers can think long term in terms of their daily investments and the way they see investments. The main issue with closed-end funds is that you have to close the fund after 10 years, so you always look for exits. Tradable venture capital funds, there are different versions in different markets. We have our own version. Let's see how it works, but we saw a lot of demand. We had 9 IPOs this year, and we have a couple of new venture capital funds in our pipeline. We also launched a new private market, which called Taste Up. It's an unregulated market, which basically connect accredited and institutional investors with technology companies and venture capital funds. Fully unregulated, you don't need to file prospectus. The reporting requirements are up to the company and investors, and the shares are fully tradable. We are the only stock exchange, as I'm aware, in the world that allows trading, continuous trading in private shares, private company shares. This is actually very exciting. We had the first 2 deals launched last month. One is a company that have raised $100 million via this platform, company called Aviv. It's a US-based company owned by Israeli investors, led by top tier venture capital funds. And we had another venture capital fund that called Group 11 that raised $120 million using this vehicle. This is very convenient for local institutions since they see it as a tradable asset. So it's easier for them to invest. And I mean, the procedure of getting investment in private capital, in private equities is longer, takes more time. You need more committees. It just takes more efforts to do. And on that perspective, we see a lot of demand. We have very strong pipeline ahead, so we are very excited about that.
That's great news. And Neil, how many IPOs have you done this year? I don't think you've really had a chance to kind of have a cup of tea.
There's been 12 tech and consumer internet IPOs so far. We've got another one tomorrow, and some more the rest of the month. Really exciting time in London. Just to pick up on a point that Lior raised, or 2 points really. Tradable funds. So great to hear that you're looking to do that in Israel, because we've seen Draper Esprit here and Augmentum benefit from access to evergreen capital, and ultimately, Lior, it's just democratizing access for retail investors to those private companies. And what we're also trying to do is make it easier for retail investors get access to exciting IPOs. So we invested in a startup called Primary Bid that makes it very easy for banks to deal with retail through essentially one counterparty at IPO, or in the case of raising follow-on capital. And it's a really exciting time, not in terms of volume and the company's thinking about listing, but all these mechanisms that are making it easier to list companies. Reid Hoffman of LinkedIn and PayPal fame said that it's much easier to list your business than it is to plan for a sale, and you should focus on being ready to go and push those buttons. And to a point that Mark raised, it's great that founders today have the choice between a direct listing, a SPAC, or traditional IPO, and I think that's good news for us all.
Fab. So because you're the kind of gurus of capital markets, all of you, I'd like to kind of leave our audience with some really useful, tangible tips about, your words of wisdom on IPO, on SPAC, the do's and the don'ts. So you've each got a minute and a half. Well, let's start with Mark.
I would say make sure you understand the alignment of interest of all the parties around you. That is really important. I think that a lot of times you can pay an investment banker fees, and you think since you're paying them fees that they're aligned with you. And I think that that's not the truth. I think the investment banker's clients are actually the investors. And I think a lot of times you can pay you can assume that because you're merging with a SPAC that your interests are aligned with the sponsor. You may find out that's not the case, because they just want to get a deal done and sell your stock afterwards. I think that the exchanges really are relatively agnostic on how you get there. They want to support you when you're there. And I think your lawyers are typically very much aligned with you, because they want you to succeed and continue to grow. I think that's really important. You have to follow the money. And I think a lot of times people don't fully internalize that there are different parties around the table who are pushing you to do things that aren't necessarily in your best interest. So I think really the most important advice I would say is get your business plan to a place where you know what you need. Explore your needs from a capital perspective, and then explore based on that, on your decision of what you need. Who are the partners you want around the table? What's the route you want? Where do you want to be? And guide your own process rather than be pulled by people who aren't fully on line with you.
That's excellent. Sage advice. Over to you, Mr. Turgel.
I would say in a very similar vein, be prepared, get your house in order kind of earlier than you may have thought necessary. Act as if you're a public company even when you're not, and don't rush. So particularly with the SPAC wave at the moment, everyone's rushing, and people are being pushed to act very quickly and make decisions in a very unhelpful way, because they're worried that the market's going to crash. Opportunities are here today but may not be there tomorrow. But don't rush. I agree 100% with Mark. Get the right advisors around you who you can trust, and actually spend time getting to know the different advisors that exist in the market, and make sure that they're people you can work with and they share your vision. and just be prepared.
Thank you. And Lior, over to you before we wrap up with Neil.
I agree with everyone. I'll just add that, you know, in my perspective, just don't go public too early. We've seen a lot of companies, you know, young companies that, you know, just were very excited about the valuations that they can get in the public markets and you know, their share price, and that's not what should drive entrepreneurs in general. I think that you need to think again before you go public, that your company prepared, that you have all the right people in place, and I guess in order to build value, startups fluctuations in startups, and you know, the volatility every startup experience, that's something that the capital markets do not observe the same way as, you know, the private investors. So I would say that, you know, if you are too young, don't be too temptation in you know, in the SPACs and IPOs now huge. You get a lot of every entrepreneur that I'm in talks with get SPACs, you know, sitting on their back, trying to convince them to go public, and sometimes you are not ready. And also a lot of times, and we actually seeing a lot of SPACs that are going, you know, and offering huge amounts of value. I mean, the valuation just crazy. And the way in the end of the day, if you'll go in a high valuation, and you'll have to justify this valuation for the long term. And if you won't be able to do that, if you are too young and you're not certain that you will be able to execute, okay, I guess everyone will lose around you, and you'll be the first one that will have to, you know, stand in front of your investors and say why the share price is not continue to go up, and the markets are vicious in you know, in terms of, you know, punishing you if you're not executing. So just don't go too early.
That's really very useful. And some mindfulness on capital markets from Neil.
Yeah, I think most of the points have been covered already, and that was good. That was great advice. I think, you know, founders, management teams, directors need to dig deep and ask themselves, you know, what do they really want from the business? What do they need in terms of capital? Where they want to be in 5 years, and, you know, work towards that. There's no right answer as to when to push the button from a fundamentals perspective. But to Lior's point, it comes back to, you know, your ability to manage expectations, because, you know, public company investors, while passive, you don't necessarily have the patience of venture capital and growth equity investors to tolerate, you know, losses and missing expectations, and sometimes it's just easier to be that private business, especially if you're going through a transition. But look, we stand ready to support those companies and to guide you, and, you know, just don't be afraid to ask for advice. Take your time. If you rush, you're bound to make mistakes, and there's a lot of experience. The litmus test is really speaking to investors and people who've been through it before. You know, speak to former CEOs who've gone through it. You know, get yourself some help. IPO managers can be incredibly helpful on deals. And, you know, these are the points that we hear time and time again from issuers who've had a successful experience.
Excellent. So I'd like to wrap up by thanking you all, and thanking the wonderful Johnny for bringing us together, and to also encourage anyone from our audience to really reach out to all these amazing gurus who really have deep knowledge, amazing track record, and super helpful advice, and keep growing. Thank you.
Thank you very much, Justine, and thank you all for sharing some really sage advice. You know, it was only a year ago we were talking about well, the norm was to add an extra funding round, and now the tables have turned, and IPOing is the way. And Tel Aviv is a very cool place to also IPO, to float at the moment as well. Long may that continue. Thank you very much to our esteemed panelists, Justine, for moderating so superbly. Thank you, Lior, Neil, Mark, and Daniel, our thought leaders and experts. Really fantastic. I watched that, Justine doing that. I said, can you do a couple of hours of this? Hopefully we will be able to do this in person, all of us together in Tel Aviv next year. Thank you very much to our panelists. Thank you very much for you for listening. If we can show some appreciation for our panelists, we've got on the bottom